Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Max Brickman of Heartland Ventures. Max, thank you for joining us.
Thanks for having me.
So what was your background before investing in early stage companies? What did you do before this?
Yeah, so I've kind of been an entrepreneur, I guess, from an early age. Started my first company when I was 14 in Milwaukee, out in Wisconsin. So I had a landscaping company. I was able to save up enough money to buy a rundown duplex in northern Wisconsin. I was able to fix that up and rent it out and pull some money out and raise a bit of money and leverage that to about 450 units in Milwaukee throughout high school and college. So I had a general contracting company associated with that. So really got my hands dirty on the operations side. I went to school down in Bloomington, Indiana at IU and had an education startup. So if you're familiar with Scantron or Blue Books, kind of machine graded tests, kind of ABCD tests, it's really easy to cheat off those. You can just look at the person next to you and see all their answers. So in college, chemical engineered this paper that lets you write normally. But if you look at it from an angle, it's completely black. So you can't cheat. So I licensed that to a couple different companies and moved to South Bend, Indiana. So my girlfriend, now wife, was going to grad school at Notre Dame. And it brought me to South Bend and didn't have much intention to stay in South Bend initially, but quickly fell in love with the city, with everything that's going on between what the city was doing with the mayor's office and what Notre Dame was doing. It was the fun time to be there. It's really right in the midst of the revival. And that's where we developed the model for Heartland and where it began.
So what excites you right now? What do you see as interesting these days?
Yeah, on the technology side, we're interested in all things HR and hiring. Talent seems to be the biggest issue across the board within all companies. People cannot seem to hire fast enough. Turnover is incredibly high. So we're very excited about any technology that allows a given employee to be able to do more given their training or their experience. So whether it's VR or AR that allows them to do a more advanced job, whether it's improved workforce training, or whether it's even identifying the right candidates and being able to better match candidates. See that as a very interesting space and something that's still badly needed.
Well, you've been investing in the tech sector for quite some time. For those new investors out there, what would you advise them to do before they write that first check?
Yeah. The way we look at it and what I usually recommend is invest in areas where you can add value. And that's not just in the sense of you don't want to be dumb money, but the way we typically look at it is if you're able to add substantial value, it typically means that you understand the product well enough or you have the right connections to be able to see where the product market fit is or where the value is. And if you're able to bring in a lot of customers, that means you understand who the customers are and you've been able to validate that there are customers that are interested in that product. So I think the ability to add value is usually a good indicator of, are you investing in the right industry or are you investing in industry that's in line with your background and your expertise?
And so for the startup that's just launching their tech startup, what would you advise them to do before they go out and try to raise that first round?
Yes, we weigh product market fit very heavily. And what the customer says is incredibly important. If you're able to get product market fit, if you have the backing of customers, much easier to raise money, not just from the revenue standpoint, initial revenue, but being able to validate the product long term. So I would recommend to get early revenue, to be able to get several key customers that are not only willing to pay for the product, but willing to even support you, whether that's through testimonials or the best possible thing would be to go with you to an investor meeting if they're that supportive of what you're doing and what your mission is, or even have them invest in the company directly. And the customers, a lot of people often say the customer is the best investor, and I truly believe that.
Well, that's always great validation to have people paying for the product. My thought was always sell it first, build it second. Can't sell in the first place. No need to build it in the second place. And it tells you a lot when you go out and try to sell something, doesn't it?
Absolutely. You learn a ton.
Right. So as you see the venture capital industry continuing to grow, how do you see the industry evolving these days? What direction do you see it going?
Yeah, obviously there's a lot of money out there at the moment. There are a lot of new funds being created, and the funds that are already there are getting larger. But one of the newer things that we've seen is just more involvement from the corporates. corporate venture has been around for a while, but it's still becoming more popular. And the ones that don't have an established corporate venture program are beginning to invest in other funds or take the VC space more seriously, just because as they weigh options of, do we invest in R&D or possibly see what else is out there, instead before trying to reinvent the wheel, being able to use VC or corporate VC as almost an R&D approach.
Great. So Heartland Ventures has a very interesting investment thesis. Can you tell us more about it, how you guys work and how it's going?
Yeah, absolutely. So we're obviously a Midwestern-based fund, but we predominantly invest on the coast into companies where there's an opportunity for them to expand back into the Midwest. So if you think of, there are amazing technologies that are being developed all around the country, but in a lot of cases, especially for manufacturing technologies, logistics, their market is in the Midwest. So we identify the technologies that are being developed, again, on the coast where we can validate their product market fit through private businesses in the heartland. So basically the people that they will be selling to. And the more we can make those connections, the more we're able to validate the product and the more value we're able to provide.
So can you describe one or two startups that fit that thesis that's worked well for you?
Yeah. So I think Strong Arm Technologies is a good example. They're based out of Brooklyn, developing, the founder, Sean, they've developed an amazing device that basically tracks movement for what they consider to be industrial athletes. So people that are working in manufacturing settings or logistics where there's a lot of lifting and a lot of injuries. And they're able to identify those injuries and report that back to the user as well as potentially the manager so they can prevent those injuries in the future. And that's, I think, a great example of something that's developed on the coast, but there are a tremendous number of applications for that in the Midwest. We work closely. We spend a lot of our time in South Bend, and nearby is Elkhart, where the majority of the RVs and pontoon boats in the country are all manufactured. And there's a lot of manual labor, and what comes with that is a lot of injuries. So being able to identify that company on the coast and then connect them with these RV companies who are great potential customers for them in a market that they probably wouldn't have considered otherwise allows us to validate for ourselves that there's product market fit, that people want this. It allows the corporation, the RV company, to find a technology that can help their employees. And then obviously it helps Strong Arm identify a new market. So we really focus on aligning incentives. And I think that's a good kind of representative case study of that.
Great. So what are the challenges in the space for the startup today? Regulatory, market, technology. Where do you see startups having to spend the most time trying to overcome to launch and grow their startup?
Yeah, compared to other times, it's definitely not money. There seems to be a lot of venture capital, just investment dollars out there to invest in early stage companies. But I still think it comes down to market. There are a lot of products that are being sold, a lot of early stage products, a lot of interesting things that are being developed. And there's more competition to get that face time with the key customers that can make or break the startup at an early time. And that's why we're a big proponent of the best way to ensure you're able to get that face time with the customer is to be near them. And for a lot of these companies, if you're in San Francisco and developing a manufacturing technology or logistics technology, for the most part, you're not near your customer. So to be able to solve the market problem, you should be near them. And that's why we're a big proponent of the Midwest and why you should be located here, other than the fact that it is a lot less expensive, but really mostly because this is where your customers are.
Well, that's a great place to be. So what particular sectors or applications out there do you think are coming up that are immediate opportunities for other investors to pursue?
Yeah, we're excited about the augmented reality space, especially as it relates to kind of what we were talking about before with training. I think there are a lot of technologies that are being developed. I think it's still very early, but the ability to increase safety and decrease training time through augmented reality training, especially in high-risk areas where there's machines that are hot or have pinch points or can electrocute you, whatever it might be, being able to have that information available to a new employee through augmented reality, I think can be incredibly valuable. And I'm excited to see that develop over the next couple of years.
That's great. Great new technology. It seemed like it's making good progress. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I guess I'll put in a plug for any startups that are on the coast. They should consider the Midwest. There's, again, other than the fact that it's a lot less expensive, in the early days of testing your product, I think this is the market where you can really be, where you can be located and where you can get some early traction. There's also a lot of great organizations that can provide a lot of pretty amazing incentives that can help recruit you guys out here. But I would just challenge you to consider it.
Well, it sounds like a great opportunity. How best for listeners to get back in touch with you?
Yeah, I think the information will be listed either through LinkedIn or our website would be great. Feel free to reach out anytime. Next time you're in Columbus or South Bend, send us a note.
That's great. We'll put those in the show notes and look forward to having you back for a follow-up soon. And want to thank you for your time.
Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.